Peter Cardillo, the chief market economist with Spartan Capital Securities, to talk a bit more of all that transpired in the global equity markets overnight. Peter, good morning. Back here from Mumbai. Thanks so much for joining in on ET Now. I want to start off first with the top headline from the United States, and that is Paul Manafort as well as Michael Cohen. Michael Cohen, in fact, for that matter, admitting to 8 counts, and that I think is going to be a big deal because it directly implicates President Donald Trump himself.
Yes, that's correct. But you know, the markets don't seem to be too worried about that right now, and I think the reason for that is that even if you know the situation becomes somewhat more intense for Trump, I think the market is convinced that even if the president should resign, of course, the vice president, Mike Pence, would be the new president if it got to that point, obviously. But the macro situation would not change, and so the administration's policies would continue. And I think that's one of the reasons why the market has thus far not been really all that concerned about Trump's political woes.
Peter, hi, it's Karunya as well joining into the conversation. Let's talk a bit about this really long bull run that has been on since almost 9-10 years now, and right now also with looking at S&P surge to record highs, the bull run is still continuing despite so much volatility, so many global trade wars, so many macro concerns. What is it that you think is really fueling this rally, and will it be sustained? Do you see it getting sustained from the medium to long term as well from the current levels?
Well, it's very simple. The fundamentals are very strong here in the United States, and the global market is doing pretty good. And so when you have the fundamentals in place, you can continue to have a bull market. That doesn't mean that, you know, there aren't concerns out there or there aren't potential problems that could reverse market sentiment and, of course, reverse economic activity. And I'm obviously referring to the trade war. If the trade war were to intensify, obviously the market would begin to act negatively because you would obviously then break the back of the strong corporate earnings that that corporate America has been reporting, and of course that's all due to the good economic environment. In spite of higher interest rates and the potentials of higher interest rates, the economy continues to perform. And again, the reason for that is because rates have still not reached a normalized level. And so that's given a big push to corporate America. And then, of course, we had the fiscal reform, which obviously has helped many corporations to buy back their securities. And that's basically adding a cushion to the market.
Peter, what about this entire tussle between the Fed and the Trump? I mean, it perhaps would be a bit too early to call it a tussle of sorts, but this is the second time that the Trump has actually called out to the Fed on why they are essentially increasing interest rates. Now, of course, for Mr. Trump, the perspective is different, and his own political ambitions, his own ambitions for the economy are different, whereas the Fed would have to actually aim for more stability. But at this point of time, they as well are split between the inflation trajectory, as the Fed minutes indicated. So how do you see this play out over the long term? Do you think that the Fed is going to still continue with its own dot plot and continue raising interest rates?
Absolutely. I think that, barring any increasing trade war problems, I think that the Fed is going to raise at least 2 more times this year, certainly in September and perhaps in December as well. And they made it very clear in the minutes today, and they said, the economy is strong. The only fear they have is, again, the trade war. And so if we can escape the trade war from expanding from these levels, then I think the Fed will continue to raise rates. Obviously, if there is no agreement with China or perhaps the rest of Asia, then I think, that will be a problem, and they could then perhaps halt the hiking process. But for now, I think it's a green light, and I kind of think that we'll probably get some sort of an agreement with the Chinese. It might not be what the administration wants, certainly not what Trump wants, but I think it would probably be enough to for the administration and Trump to save face, and at the same token relieve the markets of any increasing trade war perspectives.
Okay, Peter, very quickly, before I let you go, I have to talk to you about the biggest IPO in the capital markets, and now reports are suggesting that the same may be shelved off, and I'm of course talking about Aramco. We have a dynamic young prince who's instituting and introducing all these interesting ideas and perhaps trying to wane off the economy's interest away from oil a bit, at least diversifying it. You have oil prices as well that have slowly started to support this IPO. What is the possibility of this long delayed IPO actually being pulled off? Right now, it's not official news, but still reports are suggesting a very strong cue about this IPO being shelved.
I really don't, have much of an opinion on that. I don't think that it's going to be detrimental. I think there's enough of strength in the global economy for oil prices to continue to move on higher. And I don't have any real thoughts of what may or may not happen in terms of the Aramco deal being pulled off the shelf. Pulled off the shelf.
All right, Peter, lovely chatting with you, and thanks a lot for putting a lot of things in perspective as far as the fundamentals go, the economy, the state of the economy back in Wall Street goes, and of course the Aramco IPO.